So let's jump straight into it. Looking at our vesting balance now. My vesting balance is $5,798.55. Currently on the day, we are up 5.59%, which is roughly $305, almost $306. On the week, we are, let's see here, down 1.47%, so down about $86. On the month, we're up 3.5%, or roughly $196. The last 3 months, we're up 4.92%, or $271.74. That's enough talking, bruh. Let's get into it. Started this particular portfolio on the 8th of February of this year. So diving into it, man, let me put my cup down. It's just wine. I ain't got no, it's beginning of the week, so I can't drink like that yet. But after a long day, you guys know, you gotta relax. Some people drink beer. I'm not much of a beer drinker, every now and then. But anyway, let me give this disclaimer. I am not giving financial advice. This video is for entertainment purposes only. I try and give you my perspective on things, share some information with you guys. My focus is to motivate people, man. Motivate people to get involved, to start getting interested in the stock market, start getting interested into savings and budgeting and good stewardship. If you haven't already, please watch my last video on why a budget shouldn't seem like Thanos. So let's jump straight into it. So here I just bought more Southwest stock, Southwest Airlines. I'm trying to average down my position for that particular stock. I bought 2 more, so it wasn't a big acquisition, or it wasn't a big increase in positions. 2 shares at $29.10. So if we bounce over to, there we go, Southwest Airlines. Let me turn my laptop and make sure it didn't turn off. Southwest Airlines, my current average cost is about $28.55. More specifically with Southwest Airlines, I just want to increase my position with the company. Again, the whole entertainment, the airlines, travel industry, it's taking a big hit now. As you see, places are already starting to open up and people complaining. I mean, the planes are packed, which they shouldn't be. That just shows you how motivated people are. So I say, don't just dismiss that entire industry, even from, the airlines to cruise lines. Don't just completely dismiss. Do I think it's going to take a while for people to have that complete confidence in travel like before, even close to like before? Yeah. So this is not a quick hit type of position that I'm taking, meaning, or a swing trade, meaning, okay, I'm gonna just buy this now, sit on it for a little bit and then sell it. For me, I do think everything will rebound, to include the travel industry. I think there will be some things that will permanently change on how we go about doing that, safety precautions and things of that nature. But I do think in the long term, it'll bounce back, and especially Southwest. Just a couple of quick points and reasons why I feel that. Southwest is focused domestically, so domestic travel here in the U.S. So the cost, its sheer cost, is way less. The debt that it carries is way less than most of these other airlines. It's very efficient. It's low cost to even get back into the normal routine of business. And a lot of people have said that in this industry, it's a really rough industry. I mean, all companies tend to carry a whole lot of debt, a substantial amount of debt. Unfortunately, but with this particular company, because of their business model, they are able to avoid that tremendous amount of debt a lot more and have more assets on hand. Now, of course, the time that we're in now is stressing all businesses out, so they're having to go through that cash, but long term, I think they're going to be just fine. So So I also bought some American Airlines. Some of the same reasoning. Obviously, American Airlines carries a whole lot more debt. Of the airlines, major airlines, in terms of looking at the financials, I think they're the worst setup, to be quite honest. I mean, the debt that they carry, the revenue that they're bringing in, just, and that's debt short-term and long-term. So there's a lot about this company that I really don't care for, but it is on sale, and especially when I'm buying in at these points, it's on sale. And one thing we do know, the company is not just going to dissipate. It's one of the larger companies in that industry. I just don't have long-term faith in the company like that. So for me, I try and put, at least long-term, try and put my money in stuff I believe in. I went ahead and bought 2 more shares of American Airlines, and that was at $10.28 now, for a total of $20.56. So my average buy-in for American Airlines now is right at $11.27. So I currently hold 23 shares, equity position of about $229.77. So I'm down roughly about $29 on my total return. So quickly moving through moves that I made. So I went ahead and bought, later that same day on April the 28th, I went ahead and bought one more American Airlines stock. I think it was just some change that I had left over. I had enough to buy one more share. So I went ahead and bought one share at $11.15. And again, that actually just building that position. And it didn't damage in terms of my average cost. It didn't send me up much higher, if that makes sense. So I'm all about, even if a stock is higher than what your average cost or buy-in cost is, it all depends on what you think about that company and what you're trying to do with the stock. Some people, oh, no, you shouldn't. It's higher than what your average buy-in is. You shouldn't. Well, not necessarily. If you see value and it's still at a price that you do see upside and see growth in that company from where you're buying in at, to me, why not? Now, I think you don't want to constantly get in the habit of obviously paying more than your average buy-in. The idea over the long term is to average that down, but you shouldn't just, and I don't at least, wait until everything's on sale to buy, because you're going to miss out on great opportunities for great companies. I think Warren Buffett said it's better to buy a good company at good value than an okay company at cheap value or low value, or on sale. So moving forward, I also went ahead and bought 5 more shares of Carnival Cruise. Now that was at $14.22 per share. So my average for Carnival Cruise right now, my average cost is $10.57. So not bad. I would like to get that worked down some. Across my total return, I have 15 shares, total equity position of about $209, and total return of roughly 32% or $50.66. I'm not gonna go crazy on that one. I'm taking I always say, do your due diligence, do your research. If you like something, go ahead and take your shots. This is me taking a shot with this. I don't foresee myself building a tremendous position with the company just to try and take advantage of that upswing. I'm not gonna knock somebody if you decide to do that, but for me, I like to focus some of my energy and most of my energy on getting those dividend paying stocks that I intend to hold long term. And I'll take shots here and there to maybe make some quick money and then reinvest that back into those companies that I have the most conviction with. The 28th, that same day, I bought more Aurora Cannabis. You guys know, if you've been watching my videos, this is the biggest stance I have in the marijuana industry. And this, again, company Aurora Cannabis. I went ahead and bought 14 more shares at essentially 75 cents a piece, for a total of $10.43. So, and you guys are familiar with that if you watch my videos. If you want more on Aurora Cannabis, I encourage you to go check out my previous updates where I give you more information about that particular company and sort of why I believe in this specific company. The 28th, I bought more Southwest Airlines stocks. I bought 3 more at $29.50. And this was what I was telling you about and essentially started early on in the videos. My method is dollar cost averaging. So you may see me make a couple of purchases of the same company or shares into the same company, building my position, just trying to dollar cost average, because some people try and wait and time the market. Come on, man. I mean, if you had somebody that can do that consistently, they would own the world. They'll be so filthy rich, it's ridiculous. Now we do have some people that are filthy rich, but it's not because they can accurately time the market every single time. So for me, I'd rather spread that. And then sometimes it's within a day, sometimes it's across a week or a couple of weeks, just consistently sticking to that plan and buying in across time. That's the strategy that I have, especially as a dividend investor, and that's the strategy I'm gonna stick to in the foreseeable future, if not forever. So moving forward, now, here's one of the new companies, and I won't spend much time on this particular company, is MGM Resorts. I think it's been heavily talked about. I bought into MGM just because you see the tenacious focus that some of these governors and mayors have on these businesses. In my personal opinion, I think a lot of these places are going to open just to close back down again. I'm in Texas. Unfortunately, I think we're going to see the same thing. People are, it's another conversation for another day, but I think we're to the point where we're almost valuing a dollar more than a human life. And the acceptance of, people are going to die regardless, not listening to the science is crazy to me. But anyway, that's a whole nother video for another day. But anyway, MGM Resorts, it will bounce back, absolutely. Vegas, that's their primary focus, is tourism. And all these spots in Vegas are heavily trafficked places. And people are salivating, as you see. Flights are already packed. People are already trying to get out. Too many people in restaurants and trying to travel and this and that. So people are already showing you, they're already salivating to travel. I think it's unfortunate. I think it's too soon, but nonetheless, I think down the road, I do foresee me, just my personal opinion, again, I'm not a licensed expert and I definitely don't have a crystal ball, but I do see a lot of places opening up. Unfortunately, more damage from this horrific pandemic that's going on being done to our society and it closing back down. But I think in the long term, these establishments will get back to normal, and of course I want to take advantage of that upswing and sell. I don't intend to maintain or keep my position with MGM Resorts long term. So moving up, so on the 1st of May, I bought 5 more shares of American Airlines at $10.68 a share. So again, just trying to slowly increase my position with American Airlines. The focus on that is just to catch the upswing. I intend to sell the stocks that I do have with the company in my position and invest that into other companies and stocks that I have more conviction in. So moving up, I also bought some more American Airlines. More Southwest Airlines. I bought 3 more shares at $27.23 a piece for a total of $81.69. That very next day, the 2nd, this is another new company, Synchrony Financial. So with Synchrony Financial, it's my draw to the company itself is the fact that the diversification of the company itself. It operates as a consumer financial service company in the United States. It delivers all kinds of specialized financing programs and consumer banking products to digital, retail, home, auto, travel, health, and pet industries. But the diversification right now is sort of a tough time for any industry. But the way they've broadened their palette in terms of their business model, all these are necessary and needed industries, or even just purely looking at the real estate itself. It also offers general purpose co-brand credit cards, small and medium-sized business credit products, promotional financing for consumer purchases. The list goes on. I highly encourage you to hop on, even just if you hop on Yahoo Finance and take a deeper dive into this company. But I do like the diversification, and I am trying to diversify my own portfolio and get into different industries. I'm realizing that I'm gearing more towards REITs in the real estate industry. So I'm trying to slowly diversify that, because you never want to have the bulk of anything. Well, it depends what kind of investor you are. But for me, I want to broaden my horizons, and I want to diversify my portfolio. I'm spreading sharing that risk. So no matter typically what's going on, I won't be dependent on one particular industry. And if that particular industry decides to tank or do horrible, well, they're with my investments. So for Synchrony Financial, I bought 3 shares of Synchrony Financial at $17.95 for a total of $53.85. I'm bouncing over to Synchrony Financial. Right now, on the day, my total return is, I'm up 15 cents, so I'm balling, I'm killing. You already know, I'm killing. Okay. Anyway, so with Synchrony Financial, of course, they are a dividend paying stock, dividend yield of 4.73% right now. For me, I wanted to buy a small position. I will slowly increase this, but I'm going to continue to do some research to really figure out if this is somewhere I want to be long term. So that's how I do it. Some people are different. You just put on your watch list and just keep your eyes on it. I like to get in. I do know that, in my opinion, it was a good value for the stock and the shares, individual shares themselves. So I wanted to create just a small position. I mean, it's only 3 shares, but that allows me to keep it fresh on my mind. And as I slowly increase, I foresee myself buying just those little small chunks, like 2, 3, 4, 5 at a time. But my focus will be continuing to do my due diligence and becoming more versed on the company itself, familiar with the industry, but the company itself just past what the financial statements are showing me, right? And then I can make that decision if I want to stay in the long term. So I went ahead and bought 1 share of Gnc Investment. So Gnc Investment is another new company to the portfolio. And that share was at $12.46. Let me bounce on over to AGNC. So AGNC, right now I am down. My total return, I'm down 14 cents. And again, I only have 1, but this is another one of those opportunities where I'm going to create just a small position. This is one of the smallest outside of fractional shares. I just bought 1 share just to keep it fresh in my mind, continue to do some due diligence. It seems like there's no middle ground with this stock. It's either people hate it or people love it. Me, so far, I'm very interested in it for the long term. Again, it is a dividend paying stock. Right now, it's a bit high at a dividend yield of 11.31. But I do see the growth potential moving forward, and looking at the history of the dividend payout. I mean, a lot of companies are doing pretty rough right now, but just over time, and once things normalize somewhat, I do see this possibly being a player or part of my portfolio and having me creating a larger stance with the company. So we'll see, and I'll keep you guys posted on how that's looking. But the company invests in residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by government-sponsored enterprise or by the United States government agency. I do like the way it's set up, having that security of the good old U.S. government. It's, again, a conversation for another day, but I do like the setup. I do like the financials on the company itself. It is more of a safer, in my opinion, more of a safer kind of investment. I did add 177 shares of Intracom. Intracom is a company that I'm familiar with. Previously had invested into the company, and this again is a swing trade for me. I'm not looking to hold on to this long term. What I am doing is waiting until I have confidence in the company itself and what it does. So what I'm going to do is wait until that swing back and just sell it and get what I can and move on and reinvest that money into, again, a company that I have more faith in. But the company itself, it's a provision of media and entertainment services. Portfolio includes radio stations, markets, media brands, events, and case studies. But they also focus on, and part of it is concerts, large scale and smaller scales, or getting big, huge stars in little spaces. Right now, the performance of the company, obviously they're not being maximized because of what's going on with this pandemic. However, look around, watch the news. People are showing you that they are ready to get out and ready to jump into whatever they can get into. So I do foresee that swing coming up. in the future, and I'll just be patient with it in the future. And when it does happen, folks are going to get back to attending concerts and shows, and radio's going to be, turned up, and you have, all that kind of stuff, the normalcy that we'll see in our society. Then I'll go ahead and sell it and reinvest those funds. So another company, Chimera, just real quick, I bought 2 shares at $8 per share. I am up a whole 3 cents. Huh? Now do you want to go on that date? Yeah. No. Chimera is actually a company that I intend to keep in my portfolio and consistently build my position in. But it deals in residential mortgage loans, residential mortgage-backed securities, commercial mortgage-backed securities, real estate-related securities, and various other asset classes. So I do like the diversification within the company itself. And again, another dividend-paying stock. I've had some solid history and performance that I've seen firsthand owning some of the stock previously. So I think I will do that moving forward. Looks like the analysts are saying, hey, either buy or hold. So I will continue to build my position in Chimera. Chesapeake Energy. So Chesapeake Energy is the opportunity that I want to talk to you guys. I've seen a whole lot of questions being asked, or just feedback or talk around some companies possibly wanting to or needing to file bankruptcy. So there's two types of corporate bankruptcies that I'll cover, and that's a Chapter 7 bankruptcy and a Chapter 11 bankruptcy. So we'll get into this just so you guys know the difference between the two and how that would affect you, the investor. So getting into it, we'll start off with the Chapter 11. So Chapter 11 is going to be, that's what I call companies or wealthy people's way of reorganizing their responsibilities. And that's essentially what it is. So in a Chapter 11, you'll have the reorganization of debt. So it gives businesses an opportunity, businesses who need time to meet obligations, it gives them an opportunity to sort of reorganize their debts and essentially negotiate new terms. Now that doesn't necessarily relieve them of having to fulfill those obligations, but what it does is just restructures those obligations and to make them more favorable for that company, typically to allow more breathing room in the short term. And sometimes it's even more breathing room in the short and long term. It depends on how they negotiate and structure the deal. But so for that particular situation, the stock will take a hit. It'll be hard to essentially at that point, your stock in that particular company won't have any more value, right? At that specific point. In this particular in Chapter 11, this particular bankruptcy, it gives the company, essentially, you have to understand what it's doing. They're reorganizing the debt obligations. So 9 times out of 10, they're getting some breathing room and allowing their business to grow and gain, that level of success or that level of production to start making money and be able to place themselves in a situation to take care of those obligations that they've legally agreed to pay. So in that particular case, and that's what I foresee Chesapeake Energy doing, Chapter 11.
So I do want to be clear here. In Chapter 11, your hope is that the stock itself takes a minimal hit, or the value of that stock returns once the company is back up and running with that bought time and restructuring of the actual debt obligations. And Chapter 7, that's where it's a liquidation of the business itself. So they're selling the assets, and of course they get an individual to do that for the company, but they're selling off assets and liquidating the company itself. That's what I call you gone, bruh. That out of business type action, and essentially trying to cover and pay off all the debt that it owes. Some companies are not able to do that, so it's bye-bye. Some companies, if they liquidate those assets and they're able to cover the debt that they owe people, the different investors or the different loans, etc., then the law decides at that point if there's anything left, the law decides who gets paid first. And it's typically going to be government, the government itself, or lenders, major investors who have large shares, corporate investors, things of that nature. We're at the very bottom of that totem pole. So us, the investor, the individual investor, the guys here just trying to build some wealth, are pushed to the end. So in this scenario, it is very likely that you get absolutely nothing in return. You may be able to salvage a little something, but again, we're at the bottom of the totem pole in the law's eyes when it comes to who takes precedence and priority in getting their money. Cut the check. Just want to throw that out there.
And then I went ahead and bought 5 more shares of Chesapeake Energy at $12.82 a piece for a total of $64.10. So guys, I think as of right now, we're doing okay. Just keep chipping away at it, chipping away at it. I hope that you got some value from this video. My hope is that if you haven't already, go ahead, like, subscribe, and comment down below, if there's some things that you want to talk about, or if you want to share what you're investing in, or if you have just general questions about investing or stewardship with your money, drop those questions down below. My hope is that you get inspired and you move to open your own Robinhood challenge and start your own journey with Robinhood and building that wealth, even if it's not Robinhood, if it's in One Finance or Vanguard or whatever brokerage you decide. I highly encourage, let's start building that wealth, man. Let's put in that grind right now so later on in life we don't have to. So I will leave my link in the description for my referral link to Robinhood. So if you haven't already started your own Robinhood, all that is, I'm not affiliated with Robinhood in any way, shape, or form, but what that will allow me to do, me and you, actually, is to both get a free stock by you using my referral link. So just another way to show love, show some support, but most importantly, your opportunity to start your own journey, man. There's no better time than right now, so let's get to it. With that, appreciate y'all. I'm gone.